we'll let you go on that note today. Thanks a lot for joining us. Let's invite our next set of guests. We have Varun Daga and Charandeep Singh, co-founders and fund managers at Girik Capital, now joining us. Gentlemen, good afternoon. Thanks a lot for joining us. Charandeep, let me start with you. How are you reading this recent market volatility, and have you raised cash levels here, or on the contrary, have you used the market correction to buy? What's been your sense?
Hi, good afternoon to all your viewers. So I'll try to answer that in two parts. I think the first question is, how are we reading this market fall? Look, I think it's a very normal market fall. It's about 15% down from peak. And you had, ever since I've been in markets, or ever since Girik's been around, there have been a litany of these 15% falls. Obviously, when you're in the middle of them, the rhetoric, the news, the environment, it turns very bearish, and people tend to start becoming pessimistic, especially when that's accompanied by poor headlines. So I think it's important to put into perspective that this is normal course volatility. Of course, it could get worse before it gets better, or it may not. I don't know. I'm not trying to predict that. But embracing 20% falls in portfolios, that's par for the course. So that's our view on the market and the current environment. As far as how we are positioned, look, we have a specific mandate at Girik. Protecting and growing investor capital is part of that mandate. We're very clear. We don't like to lose money because we're very sure we make the money on the way up. So we have very strong risk management practices at the firm. And, what we do is we make sure that whenever there's a market fall or whenever the tide sort of turns, the stocks that we are in, which don't meet our criteria, which have fallen too much, or which are not behaving the way we want them to, we tend to shave off those positions. So naturally, as in the process of managing risk, we tend to raise our cash levels. These aren't cash calls. It's just that we get out of areas where we are losing money to redeploy the money into areas where we are or should hopefully find new opportunities over the next few months.
Okay. Put up Bharti. Bharti is a big sort of exhaustion type of a candle. It's a big red candle. The day's high on Bharti is 727. And it's basically come off almost 40 rupees from that high to trade at about 695. The low was about 6. So it's basically closer to the low than to the high. And there are some comments coming in from the conference call for Bharti. Two things. I mean, maybe I'm just reading a bit too much. We need to see the context in which these comments were made. But one is, of course, that they are seeing a slower pace of adoption, sort of transition from 2G to 4G because of the higher cost of smartphones. That is one, which is not great news. Second, of course, is the fact that they're reiterating the 300 rupee ARPU guidance, but over the longer term. So I don't know if there is any specific. I don't think there was a specific time frame put to get to that number, although there has been a lot of focus on that number. So those are two things which are coming in. It opened higher, but that basically the gap up in the morning was a day's high, and from there it has drifted down. Varun, afternoon, Prashant here. Just a quick comment on the market before we get into specific names like Bharti. Would you imagine that from here, for the market to fall substantially, it would take a lot more in terms of news flow or events or anything than it would take to lift the market maybe in this pullback? It would take little for the market to lift from here as compared to push it meaningfully lower. Your thoughts?
Yeah, hi Prashant, and thank you, and hello to all your viewers. So I think you're right. Maybe it will take a lot more for markets to fall because we've seen good earnings, especially in some of the large caps. We've seen earnings momentum being very good, and I think future also looks pretty rock solid, especially as far as India is concerned. So I think we need to see some kind of global bad news for markets to correct further from here. But it can happen, we've seen things, markets be more irrational for a longer time than before it comes into senses. But I think if one starts building their position from here, I think from 3 to 5 years, it'll be a happy investor because, you're getting some good levels. The froth is out of the system. We've seen a lot of froth built up over the last 2-3 years, and I think a lot of that has come to senses. Still might be some froth in the mid and small, but I think from the larger cap perspective, we've seen a meaningful correction. So I think you may be right there.
Okay, all right. Good afternoon, gentlemen. Thanks so much for joining in. Charandeep, but coming back to you on those cash levels, the sheet that we have got that's coming from your team is that cash is at around 30% as of now. Could you confirm that? Have you deployed some money? Has that number come down?
So the number has come down, and we're consistently looking for opportunities, especially amongst our existing portfolio stocks. As we feel better about them, we change the position sizing. We may tend to get more aggressive with certain bets at a certain price. So yes, the cash levels have come down, and like I said, for us, the cash level is nothing but a consequence of taking certain risk management action and exiting certain stocks or positions and redeploying the money where we believe our investors will earn the maximum possible reward for the risk that they're taking at the time.
No, Charandeep, at 30%, so what does it come down to? Has it come down to 25%, 20%?
Yeah, it must be around there right now. I don't have an exact number because thereabouts, yeah.
Okay. Now, Charandeep, the big bet that you have is on Bharti, 7.4% of your weight. It's a stock which has done well. But, are you bullish on this structurally from here on? You think it can be a compounder?
So, I'll tell you, it's hard for me to get into individual names and to, comment on whether it can be. But obviously, as you can tell, we are, it's a significant holding for us. What I can broadly talk to you about in a minute is, the nature of the thesis and, why we actually got into it. So, it's exactly what was just mentioned on the earlier in the interview a few minutes ago, that there is a very structural tailwind in terms of 4G adoption and ARPU increases. And, you're right that there could be certain near-term headwinds to that in terms of, the cost of a phone. Almost half of India still has to migrate to a smartphone. And, with all the initiatives that we have with payments going digital, a lot of rural India still has to adapt smartphones and 4G technology. And, it's a matter of time before that happens. This is such a structural tailwind in terms of getting price increases virtually every quarter. Right? The competitive elements which drove down pricing from ridiculous levels, what now looks like ridiculous levels 10, 12 years ago, to, like an all-time low ARPU of around 130, 140 rupees, abysmally low levels at which the telecom operators could not even recover their cost of capital. That environment is now far behind, and you're firmly in the hands of two players that control the market. And it's a very rare situation to have such a clear earnings tailwind for a long time to come. So that essentially has been a thesis in Bharti. Plus, this is a very inflation-proof business. It's only going to benefit from it now because the price increases are inflationary in nature, but will be easily absorbed by the users because telecom rates in India are at all-time lows compared to the globe. And, this should be fairly easy running for guys like Jio and Bharti from here in terms of hopefully ramping up their profitability quite significantly.
Okay, all right. I recall the last time we had a chat, Hindalco, some metal stocks were, top of the list, at least in the top 5 of your portfolio. I don't see that now. Have you exited most of your metal stocks?
Yeah, I presently have. Right. Yeah.
All right. So metals portfolio has reduced dramatically. What about this new age theme? Some of these businesses are good. I think the last time y'all had mentioned that as well. But have they come to those levels, that you would like to add, or is it a complete avoid as of now?
No, it's not like that. I think, I think we've mentioned very consistently, ever since we've been asked these questions about businesses like Nykaa, Zomato, we've always really loved the quality of these businesses. We've always said, let's take our time. Let's understand the businesses better. Let's understand the valuations. Let things move in our favor. So there'll be a time, and there'll probably be a time to get into these. As of now, we've not bitten the bullet. We will consistently evaluate them and take a look at these on an ongoing basis because the quality of the businesses are very, very high. I don't think there's any rush still to jump into anything just because it's fallen a lot. In fact, when things fall a lot, we tend to get a little worried because it could take years for them to recover. And we are in the business of making money. and making our investors returns sustainably. So, all the stars have to be aligned for us, both in terms of, number and earnings acceleration, in terms of the valuation being in our favor, in terms of us seeing that there's a lot of visibility that we can make investors serious money over a 3 to 5 year perspective.
Okay, the market, by the way, is again turning